Welcome everybody back to the Macro Crypto Club here. It's your host, Shane Mack. I appreciate you joining me for our second episode into the Bitcoin series, dropping every Monday. If you could also drop a like and a subscribe, that would be greatly appreciated by me. Also, maybe tweet out or send out this video to some family and friends. Have them check it out. Do the same. Let's grow this community out, and that's if you enjoy the content, that is. So let's dive into it. We're looking at the Heiken Ashi candles for Bitcoin currently. We got some great news actually today. I know it's not the best news when the markets are bleeding like they are, but Bitcoin did test 40,000 earlier today and bounced right back. So we've actually bounced around that $40,000 level a couple different times. So we're testing the waters. And every time that it does come back above, it's great news in my opinion for the long term within this year. And what we want to do is continue to see that price action as we consolidate and as this accumulation phase that we're hopefully seeing now, and that we're not continuously doing this bear trend. So obviously, as you see with the Heiken Ashi candles, this is the last 9 weeks, and we are in a bear market. Maybe, hopefully, a small bear market, but it is trending bearish. And that's not something that we typically want to talk about or want to go over, but it's just speaking the truth and going by what the metrics are showing us. So, I don't want to be the bearer of bad news, but it is what it is. And what we can go over is the trends and continue to see where the market is going, but at least we have an idea of what we got in store for us instead of just all hopium all the time. So let's go ahead and kind of dive into the Heiken Ashi candles right now and understand that these long candles with long wicks here, what we don't want is that continuation. We want to see a couple of these shorts where the top and bottom are plain. We don't want to see the no shadows. If you got no shadows, it's not a great sign for us. But what we do want to see is this, maybe within the next week or two, and we can start, and once we get that first green, then, maybe the trend is changing. We've gotten that a couple times where, it doesn't mean it's necessarily 100% go. As you can tell in this, once it did change into our more of a bull push, we did see some red, and we did see some of those changes where with no shadows, but soon right after that got another reversal. So, graphs and charts, they're just indicators. Nothing is given, nothing's telling you the truth 100% of the time. But what we can do is at least give an indicator of where we potentially may be going in the short term. And that's still why we're such a macro outlook for Bitcoin and for cryptocurrency in general, is just because we look into the future, but we also love to know what's currently going on in the market, especially if we are DCNAing, which we will talk about shortly here coming up. So as we're currently trending right now, we haven't got any reversals. This with the Heiken Ashi candles right now, it's not the greatest of outlook, but if there is any hope on the horizon, it is that we tested that $40,000 level a couple different times, as you noticed here with this long wick down here. Today, we did dip below it, but we bounced right back above it. So let's see what happens throughout the week, see how the price is dictated. Are we in another, very bearish week? It's yet to be known, and we'll see how the next few days shake out. So let's go ahead and jump in. That was a little bit of a price action, but also to talk about everybody and the sentiment in the market is, there's a lot of fear with the fear index being extremely high right now. You see a lot of individuals talking about the death cross, that 40,000, the death cross is looming. It's going to happen. It's simple. The death cross will come. It's come multiple times. It came last year, and then we reversed out of it and hit new all-time highs. So it doesn't mean that's going to happen this time, but it just gives you an idea of that death cross isn't the end-all be-all. Now, it's not a great outlook, but also, in my opinion, especially if you look back in May when the greed index was super high, and then we had that dip, it's quite the opposite now. With the fear index is all the way on the other side. A lot of panic in the marketplace. But I recommend taking a step back, looking at your options, and noticing that the market is still healthy for the long term, and even for the long term within this year. So, we're not trending in the right direction, but it's still not a entirely, winter bear market coming here. It's just, we're just in a bearish phase. So, don't let that sentiment that's in the market, all the different news out there. It's easy to get down during this time period, but also it's a great time if you have the funds to kind of DCA your way into the market, especially if you're new into the crypto space. But so some other news I want to talk about is with the Fed. This is something that's been in different circulations on YouTube, but also in the channels as well, talking about the M1 and M2 monetary policies within the U.S. I know everything's a little different in other countries around the world, but with the U.S. dollar being as dominant it is of a currency for the world, it's great to go over that. And talking about inflation is a direct correlation to Bitcoin and the future of what Bitcoin is going to offer. So what I did want to hit on was the difference between M1 and M2. M1 is more about the money that's in circulation for publicly, but also taking into account some transactions that are involved in that. But also the M2 is going to be the M1 combined with a couple things like savings accounts. There's some other bonds that are incorporated with that, and some believe that the M2 is more of a better outlook and knowing what is the money supply in our market currently. So, and some believe that M1 is not as accurate, but we're going to go over both and share it with you and let you make your own assumption into it. So with the M1 policy, as you well know right here, even back in 2001, where this is in with billions of dollars, so we're talking trillion, that's 2 trillion almost hitting in 2011, which it did at some about midway through 2011. And then once it hit that 2 trillion mark, it didn't double. The M1 did not double until 2020. It took almost 8.5 years for the M1 to double in its monetary policy. So this is with an idea of quantitative easing. And I know that back in 2011, 2012, I know Japan and a few other countries started quantitative easing even way before the U.S. government did. And you really saw the U.S. ramp up the money printing in 2020. So we went from 4 trillion in estimated monetary policy, the M1 in circulation, to now we're sitting above 20 trillion just this past November. December's hasn't come out yet. So if you're taking that 4 to 20 trillion, you're talking about 80% of all money within circulation currently was printed in the last 2 years, if you're using the M1 outlook. And 80% of all the money has been printed in the last 2 years. So that's a massive increase, massive. And even when you look at the M2 takes in some other considerations. So you don't see that drastic of a change. But what you will notice is back in 2011, you're sitting about almost 9 trillion, just right under. And when you get to 2020, we're getting to about 15 trillion. So there's about, I would say, about 60% increase from that point to 2020. But within 2 years, when it rose from 15 trillion to where it sits at today at just over 21 trillion, that's a 28% increase within 2 years. So with the monetary policy of the M1, you had a 5x within 2 years. So huge, massive increase of 500%. But in M2 showing a slightly different story, but still, if you look at that as a 28% increase in money, then you don't see that same, like, your job's not getting that 28% increase. Even the housing market didn't see that type of increase. even though it had huge gains, it still was not up to that par. So somewhere in between, with these money policies, you're going to get a good idea whether you want to believe in the M1 or M2. Regardless, a lot more money's out there in our economy than there was 2 years ago, and the increase of it is fully on display for you to see. And so what you want to make sure that you, between the two as well, is understand that the M1 and M2 have never been this close to one another in matching in an account to how much the M1 or M2 is believed for the economy. And currently the M1 is sitting right over 20,000 and the M2 is sitting at 21. They have never been that close. If you take a look back in 2011, M1's just under 2,000, and 2011 the M2 sitting at 88. I don't have something that's going to kind of give you my indication on what that means moving forward, and I do want to look deeper into it, but it's never happened in the entire history of the United States. So take that for what you may, and kind of decide for yourself what that means for you moving forward. But what I'm looking at is, okay, there's so much money into the market, into the economy. What assets can I put money to use for me? Because obviously having it in a bank is not going to increase your money, especially over a year, 2, 3, 4, 5, all that time. They're just using it. It's just for safekeeping, and you're almost paying them to hold your money, because inflation obviously is increasing, so your money's being devalued. That's just sitting there. So might as well get it into an asset that's going to help you increase. And one of the most secure assets that you can have in the crypto space is Bitcoin, the king of crypto. So it's a no-brainer in my opinion. This is not financial advice. I'm not a financial advisor. But if you got the safest asset in the crypto economy, and the best performing asset in the world over the last 10 years, since the inception of Bitcoin, year after year after year. And we're not even trying to hold this just for 6 months. We're thinking about holding this for 4 or 5 years. So you can expect returns during that timeline. So it just makes sense to me. And we're going to go right into the DCA, dollar cost averaging. If you remember from the previous video, we did a breakdown. If you started doing this back in 2017, $100 a month throughout that period of time, what you would end up with, if you just remembered it, you would have invested a total of $6,000 over that time period, but also you would have ended up with a total of, or currently it'd be worth $52,000 at the time of that recording. So obviously things have changed as the price of Bitcoin has dropped. That was at 45,000 or just under 46,000 at that time. So that's valued a little cheaper, but it's still massive return on investment. So what we're going to do is we're breaking it down, and we're going to do this on a weekly basis actually, but I will break it down monthly for you as well. So that way you'll be able to track if you decide that whatever the amount is, you don't have to do $100. You could do more. If you want to do 1,000, 500 more, if you have more, awesome, good on you. But if you only want to be doing it monthly, I'll have it tracked on here as well. So that way you can follow us if you decide you want to do this weekly, or you can follow us and do it monthly. So today's price, since this is the first episode that we're going to do this live on this, then I got the amount that we threw in, which was $100 on one of our centralized exchanges, the Bitcoin price that I was able to get at that moment, the amount of Bitcoin that I received into my wallet, and what I also want to talk about is the amount of Satoshis that I was able to get. So I was able to get 238,403 Satoshis. What a Satoshi is the minimal amount in the Bitcoin dynamic. So when you're talking about it's 8 decimal places outside of just one Bitcoin, that's the lowest denomination of a Bitcoin. And that amount of Satoshis, makes you feel a little bit better, instead of looking at that huge price of Bitcoin, look at the amount of Satoshis that you're receiving. We'll keep track of it here. Right now, if Bitcoin's price ever got to $1 million, one Satoshi would be 1 cent. to kind of give you an idea, ballpark view on that, okay? I also wanted to put down our centralized exchange fee, as they always want to get their money, the amount of money it costs. So I actually paid $102.99 to get $100 worth of Bitcoin, just so you know. If you only put 100 in, you're only going to get like, what would that be? $97.01 worth of Bitcoin. So just keep that in mind if you're using the same centralized exchange that I did. I used Gemini, based out of New York, but obviously Coinbase, Kraken, if you're out of the country, Binance, all those different things are very valuable. But I just wanted to go break this down. We're doing our first dollar cost averaging in. We're going to do this journey together. So if you want to join in, you want some family members to join in, come on over. We'll do this together weekly on Mondays, dropping the video. Got more great content about Bitcoin, how Bitcoin's going to be leveraged for the future and how that can help your wealth and how to create that better for you. Again, if you enjoy the content, please like and subscribe. I really do appreciate time. And if you have any questions, leave them in the comments.